Hello and welcome to our latest urgent market update video. Now today is Thursday the 23rd of March 2023, and we wanted to pause really over the last few days, having heard from the ECB, which was quite a hawkish, I suppose, guest appearance from Christine Lagarde, and with really this idea that inflation is currently in focus. We're not going to mix up economic volatility and instability with price stability, which is primarily their main focus, not letting inflation get too ahead of them. So really we wanted to kind of pause over the course of this week to see if the Fed would follow through. And what's interesting is not just what the fact that we've had a 25 basis point rate hike, but also how the market initially responded to Jerome Powell's statement, and then how those markets began to interpret, I suppose, the Fed position. So it's quite complicated. We're going to try to break it down as best we can. The title of this video is, we've seen bearish moves post this FOMC yesterday afternoon and evening, should I say. With inflation still very much in focus. But I guess the question is, will these bearish moves last? So let's get straight into it then. We'll start, of course, with a risk warning. Just broadly be mindful of the risks involved in trading these financial markets, and do take note of our risk warning currently up on screen. Okay, so let's get straight into it then. Firstly, we'll just have a quick look at this news event, just to try and explain it in a little bit more detail. So we're talking about yesterday, Wednesday, the 22nd of March. And we saw a rate hike very much in line with expectations. And I think the last thing a central bank needs to do now is to move away from market expectations. So everyone was expecting a 25 basis point rate hike, and the Fed were pretty much locked into that if you take into consideration previous meetings 25 basis point rate hike on the 1st of February. So it wasn't really, this wasn't a massively significant market moving event as such. What Jerome Powell then during his press conference and how the markets reacted to the Fed's current position is really of utmost importance. So we want to share with you some of the narratives that are likely to feed with this news event in mind. But firstly, we want to kind of draw your attention to markets like the S&P. What we saw last year was a very, very significant move to the downside. We rolled over. If you go back to this sort of January 2022, we were up at 4,800. And the markets took a real strong rollover to basically 3,500. So, and this is when the Fed raised rates from pretty much 0% up to 4.5, basically. So we saw a really bearish market with periods of quite excessive buying at various different times, and some were far more important than others. These are all your buy the dip type buyers, and then ultimately we kept seeing lower lows and lower highs as this market, moved lower. So we can firmly say we were in this very significant downtrend. So then this year turned around and we started to see prices, create structural failure trades to the upside, and there was a bit more positivity. But look what's happened for the majority of this year so far. We can draw very, very basic support and resistance lines. And since November of last year and currently now, we can see that prices have, for one reason or another, they've been pretty range bound. It's been pretty sideways moving. Yes, we have had a few rejections of the highs, certainly a couple of rejections, near-term rejections of the low. So after a very bearish year last year, as we're all very aware, we're actually in this little sideways indecisive phase. And unfortunately, indecision is a phrase that we use quite a lot at the minute, not just on the technical side, but also on the fundamental side and the sentiment side. So with this sort of large overview in mind, let's go in and have a look. We'll have a look at the daily time frame. Now, I want to draw your attention to yesterday's candlestick. Look at the nature of this candlestick. Previous price action was certainly pushing higher. As you can see, going into that event, we saw some further upside yesterday, this market continuing to grind higher. And then when we heard from the Fed, there was an initial move to the upside, and then as Jerome Powell closed his press conference, we started to see a significant rollover to the downside. So this is where our narrative comes in. So the question we have to ask ourselves is, where are we at now at this stage? What is this market telling us? How is this market interpreting the Fed's current position? Now, to try and explain this in a little bit more detail, we've got a couple of narratives currently up on screen, and we're just going to briefly talk about them, not in too much detail, because we talk about them an awful lot during our trading sessions every day. So there's really two major narratives, and under each sort of narrative on screen, you've got different reasons for markets moving in those directions. So what we've seen pretty much over the course of the last year and a quarter, is a very hawkish Fed, and that's raising rates from, like I said, less than 0.25 up to currently now 5%. So we've been in a very, very hawkish environment. As a result, we would expect risk off, indices lower, the dollar to strengthen quite considerably, bond yields to continue higher. We'll talk about bond yields in a bit more detail in a second. And we would expect to see some significant selling across the commodity markets as well. So, and this is really because inflation is still proving quite sticky. So higher rates basically due to sticky inflation. So the question we had really was whether this central bank would move from quite a hawkish Fed to a dovish Fed. And I think the straightforward answer to that, and the fact that will, over the course of this year, will the Fed actually start to pivot and start to lower rates because of the economic impact. And we've just had a banking crisis, which seems to have quietened at this point. But let's see if it raises its ugly head again, and let's see if the bank need to step in and do something on their rates to the downside. At the moment, that's not really on the table if we listen to what Jerome Powell has said. If we look at his actions, they may prove to be very different. So in the next meeting, will it be a 25 basis point? Will we stay where we are? We're probably expecting another 25 basis point in the next meeting. However, if this pivot, kicks in real terms, then expect that to be hugely positive for your indice markets. So, really, what the situation we currently find ourselves is that we're flip-flopping from quite a hawkish Fed, and then it turning relatively dovish, and then back to that hawkish style Fed. And that's pretty much what, if we look inside yesterday's candlestick, this is pretty much what it's telling us. But do take note of the nature of this candlestick. We've got a significant wick to the upside, a rejection of your important moving averages. This is your 50-period moving average, which is close to the price. And we traded through the 50, through the 100, and through the 200-period moving average. And we closed below the 200-period moving average technically. Plus, for those of you that are familiar with your technical analysis, this is technically now a bullish engulfing candlestick. So we should sort of take note when we see these types of candlesticks, because from a probability perspective, it often implies we're likely to get further downside. So you can see that in these candlesticks. And this is really, we were looking at today's candlestick, and actually this morning, for those of you that were able to join us for our trade plan session, we were saying, right, well, we have got the potential for some nice upside. But then when we went in and we looked at the narrative and the fact that, what is this market doing from a a technical perspective on an hourly, we've got 2 hours of really significant selling. And very quickly, our overall bias shifted from potentially kind of an upside move to actually, this is only a pullback off the low. That's all that is. So really what we're looking for now, and time will tell whether we get that break below the monthly low and whether we get that high probability sell trade, around this type of zone here. And the price of that is around the 39.35 level. That would be your structural failure trade to the downside. And actually, that's what we're waiting quite patiently for. So things are moving quite significantly. What we're anticipating is that the Fed have adopted a little bit more of a hawkish rhetoric, perhaps more so than the markets were anticipating. So really, we are looking for this risk-off trade to kick in. We're looking for the indices to take a significant rollover to the downside, still from these current levels, and we'd be looking to see if we get a little bit of upside in the dollar. Now, if you look at markets like the euro dollar, for example, so as you can see, we're strengthening currently. We're expecting this to roll over and start turning quite bearish. The same is true for markets like the euro dollar. Will we see the dollar begin to strengthen? And if so, if these markets have been pushing higher, and if they start to show signs of weakness, there's likely to be decent quality sell trades in the not too distant future. So the question does remain, we got a bearish move. We're expecting the S&P 500, and not just that, but other markets as well. We're expecting the indices to, well, let's just say that the market have determined a probably more hawkish Fed than we would probably have anticipated. So we've seen that risk-off trade kick in, and now we're looking to see if we can add the dollar strength trade. At the moment, that trade is not there. But this is where patience comes in quite nicely. And we're in the same situation across these boards. If you look at the Dow Jones, we're looking to trade this market to the downside if we break below this little level. So this candlestick, really impressive. And you can see it stands out. It's more important than any other candlestick on this market, and it suggests further downside. So we're going to see if we can capitalize on those moves. So when we look across these markets, we are very much anticipating. Oops, sorry, bear with me. We're very much anticipating further bearish moves post this FOMC. We're just getting a little bit of a kind of a dead cat bounce, a bit of profit taking in many of these markets, and we're waiting for that direction to filter through. So if we look at yesterday's bearish engulfing candlesticks, we're looking to trade in line with that particular move. We're currently getting a pullback. So really, the Fed are still focusing on that inflation picture. And the question is, how long will this narrative, this kind of hawkish Fed type of narrative, survive? Because we've also got the second round of narratives sitting just behind it. So let's say, we have a continuation on the banking crisis, and there's very significant fears that the Fed may be rocked into action. We might see more quantitative easing of some kind. There's a lot of debate about that at the minute. We might have to see, that rate pivot kick in because of, the economic situation turning really bad. So we could talk about this literally for hours. We're going to just identify that there is potentially multiple narratives in either direction. But at the moment, the market seems to be focusing more so on whether the Fed are either hawkish or dovish in nature. And that's lending itself to this risk-off bearish move across US indices. So that's really what our focus is currently. So hopefully this makes sense. It's not the most straightforward of videos, perhaps. And it's fast moving as well, of course. So there's a lot of perhaps follow-up questions that you may have. Like I said, we discuss these sorts of topics in our live trade room every day, because the more you understand about these markets, the more you can trade them with a high degree of confidence. And that's really what trading is all about. building a trade idea, developing a trade plan, and then looking to execute that trade plan. Okay, so you may have further questions. If so, do feel free to email us at support@thelivetraderoom.com. Very happy, myself or one of my colleagues will get back to you as soon as we possibly can. So any questions, do let us know. And look, thank you very much for joining us for this short video. Do stay tuned for our next video. We do, just to let you know, we broadcast our trade plan session live every single morning from 7:30 a.m. And this is UK time, by the way. And we also trade live from 8 a.m. for the European session, the European Open. And again, at 12:45 as we prepare for the US trading open as well. And these are all UK times. So for more information, just go to thelivetraderoom.com and we'll be happy to answer any questions you have through the chat function there if you need. So from everyone here at the Live Trade Room, thanks very much for joining us as always. Take care, and we'll see you soon for the next video. Bye for now.